All right, hey everybody, this is John. Welcome to the free video. Let's dive right in. The main thing we want to look at here is the S&P 500. If we look over here at the weekly chart, you can see from the swing high to the swing low, we have, after spending almost 6 weeks consolidating between the 50 and the 618, we've ultimately resolved ourselves to the upside and we'll be approaching kind of that key 786 retracement up here. If we look at the daily chart, of course, that 200 period simple moving average was the wall in the sand. It fell, and we're continuing to grind up through there. So one thing I'm looking at here is that the squeeze has fired long, and it's not necessarily exploding from here. And what I'm seeing a lot here is just a lot of rotation. So what we're seeing is money going into strong, like Facebook right now. Man, it was up 3% today. Okay, but if you look at Netflix, it was up today, but notice the pattern here. The pattern is breaking down. So, you broke down, you crossed. This is typically an area to short a stock for the start of a downtrend. Okay, so someone asks, hey, are you buying Netflix here? I'm not. I don't know if I'm brave enough to short it yet. I would just rather focus on strong long stocks. And then we can hedge with the indexes, butterflies and things like that on the indexes. And remember, why do we hedge right now? Well, as a rule of thumb, I always have hedges in place when the 10-day moving average of the put-call ratio falls below 0.80. Why? Because that's when pullbacks happen. So, you get here and that's close. You got here, so boom, you sell off. Boom, you sell off. And in some cases, it's only to the 21 EMA, and that's fine. You can hold through that if you want. Here, okay, just a little mild pullback. Here, a mild pullback. Here, something bigger, right? And of course the opposite is true. If it's up here, you're looking, for a bottom. Up here, you're looking for a bottom. Up here, you're looking for a bottom. So we're at the same point where pullbacks always happen. Now, what we don't know is it going to be, is this going to be something that lasts 3 weeks, or is this going to start tomorrow? Either way, my trading rule is that when the 10-day moving average, the put-call ratio is near 0.80 or below, I always have to have hedges in place. I will only trade long stocks that are showing relative strength greater than the markets. Okay, and then that way, those stocks may do okay if the market falls, but then I'll still have my hedges in place. All right, that's what we got. We had a fun day with Tesla in the room. Someone was asking, we're still holding on to some of it. I mean, we essentially made our entire June with Tesla. So it's June 1st and we've already made our month. So now what do we do? Well, I do think that we could actually get up to 913 or so. I mean, Tesla may just keep going. Okay, it's hard to tell, right? But we did hold on to some, and if we can get up to 913, I'll continue to peel off and trail up, peel off and trail up. Who knows where it's going to go? All right, you guys have a good one, and we'll see you at the next update.